Despite President Trump's trade war, inflation in the US isn't rising quite as fast as economists predicted. Prices rose 2.4% in the 12 months ending in May. That's 0.1% on a month-on-month basis, less than the 0.2% expected by economists. Mr. Trump celebrated the reading on social media and called on the Federal Reserve to lower interest rates by a full percentage point. Daniel Hornung is the former deputy director of the US Economic Council. I mean, he's got a lot to celebrate, hasn't he? People just didn't expect these figures to be so good. He said it'd be fine, and, they're not that bad.
Well, it's good to be with you. It was a good report. There's no question about it. I think that the question that remains is what the tariff-induced price increases do to either future inflation reports or to the economic activity and employment side of things. If you dig a little bit under the hood of this report, you see some initial signs that tariffs are starting to have an effect in some categories like consumer electronics and household appliances. But overall, I think what we're seeing is that importers really were able to largely build up their inventories and get ahead of the tariff rates. And to the extent that we're going to see some of these tariffs get actually passed on to consumers, that likely will happen later in the summer versus in today's report.
Is it inevitable?
Well, I think we're likely to see one of two things. Either we're already starting to see that importers are paying tariffs when their goods come across the country. We saw a large uptick in tariff revenue in May. So either we're going to see those prices passed on to consumers, or we're going to see companies slow their investment and slow their hiring, which also is bad for the economy. So we're likely to see one of the or either. We might actually see some of both. And I think most would tell you, based on the tariff revenue that we've already started to see come in, it really is just a matter of time, unless, of course, the administration reverses course.
What's the vibe you're getting from the Federal Reserve? Because obviously Trump's saying they need to lower interest rates, but there's too much uncertainty for that, surely.
Well, I think despite the president's wishes on that, he's put the Fed in a very hard position. Here we are debating, are tariffs going to have a bigger impact on the inflation side of things in raising prices, or on the employment side of things in terms of lowering hiring? And when the Fed has such a difficult assessment to make about each side of its mandate, what it does is it waits. And so the market now is broadly expecting that we won't see any rate reductions for the next two meetings, that we might see rate reductions in the fall, but certainly nothing like the 1 percentage point that President Trump called for today. And I think it really just does underscore the significant uncertainty that the Fed is operating under, and the fact that the best path to a rate reduction would be for some of those tariffs to get pulled back.
We saw this deal with China today. I mean, or, agreement to agree deal today with China. That's significant, though, isn't it? Whatever came out of it, it does suggest that there's some certainty coming back to that relationship, and there's not going to be any more sharp rises in tariffs. If anything, they're going to come down.
Well, it certainly was a sigh of relief today that the Geneva deal is going to move forward as the London deal. But I do think that for real sustained sigh of relief that could lead to people once again thinking about making long-term investments and long-term hiring decisions, you're going to need to see a bunch more certainty than just the July negotiation date and the August negotiation date. I think in order to make long-term decisions, I think businesses and markets are going to want to understand what the tariff rate is going to be in the fall at this time next year. And we still just do not see that yet.
Okay, Daniel Hornung, really appreciate your time today. Thank you so much for joining us.